Good morning. This is Lance, an equity analyst for ABCAP, and welcome to Daily Trading Notes. U.S. markets rallied as investors continued to focus on the economy reopening despite the protests in major U.S. cities. President Trump reiterated that he will deploy the U.S. military across areas facing protests if a state or city refuses to take necessary measures to defend the life and property of their residents. Dow Jones rallied 268 points, Nasdaq closed 56 points higher, while the S&P closed 25 points higher. For a market outlook, market sentiment has turned upbeat since the lockdown was lifted as the market breached past the 6,000 mark. The PSEI now looks to retest its next psychological resistances at 6,100 and 6,200. Volume turnover started to pick up, while foreigners turned net buyers for the third straight day, with a cumulative net foreign buying of 2.28 billion pesos. The market is 5.4% away from its pre-lockdown level of 6,353. Note that the market has rallied by as much as 49% since the intraday low in March 19 of 4,039. In other news, the Philippines recorded a BOP surplus for the second straight month in March. However, it narrowed by 28.5% year-on-year to $448 million, given the sharp drop in foreign portfolio investments, bringing down the year-to-date deficit to $68 million. The inflows in March were a result of its forex operations as well as investment abroad. These were offset by forex withdrawals made by the government to pay some of its debt obligations. The surplus recorded was despite the net portfolio investment outflow in March amid the Luzon lockdown, as well as global concerns of COVID-19 spreading beyond China. In addition, a narrower trade deficit also supported the surplus for the second month. Net portfolio investments should improve the following months on the back of an improvement in the local financial market. The PSP projects BOP to settle with a surplus this year of $3 billion. Also in other news, the local government's debt rises 1.5% month-on-month to 8.6 trillion pesos in April. The government continues to borrow more to address the COVID-19 crisis. However, we think that the government has more elbow room to borrow. In fact, debt to GDP as of 1Q 2020 even eased further to 41.8% from 42% last 1Q 2019. As the government continues to spend to address the crisis, most economists are expecting the ratio to rise to close to 50% by the end of the year. And that's it for our market outlook. Have a good day.